So, you want to make money while you sleep? It sounds like a dream, doesn't it? A life where your income flows in effortlessly, even as you rest. Dividends are your ticket to turning that dream into reality. They represent a tangible share of a company's success, paid directly to you, the shareholder. When you buy a stock, you're not just purchasing a symbol, you own a piece of a company, a real functioning business. When that company profits and thrives, they might share some of those earnings with you, a dividend, a reward for your investment and belief in their potential. It's passive income at its finest, money generated without your direct active involvement. No boss breathing down your neck, no clocking in and out, no rigid schedules dictating your day. Just own the stock, and the money appears in your account, steadily growing your wealth. This isn't a get-rich-quick scheme promising overnight riches. It's a proven strategy used and refined by investment legends like Warren Buffett, built on patience and long-term vision. The real magic, the secret ingredient? Reinvesting your dividends back into the same or other dividend-paying stocks. Each payment buys more shares, which in turn generate bigger future payments, a compounding snowball effect, growing exponentially over time. Over time, your money works harder and smarter for you, steadily growing your income stream and building a solid financial foundation. Living off dividends means your investments generate enough income to comfortably cover your expenses. Imagine your bills, food, and lifestyle all paid for. No 9-to-5 grind required. You own your time, free to spend it as you choose. Travel the world, pursue passions that ignite your soul, or just relax and savor the simple joys of life. Work becomes a choice, a fulfilling activity, not a soul-crushing necessity. It all starts with understanding this fundamental principle. Get paid simply for owning things. Start small, with whatever you can afford, but start now, without delay. Every share you purchase is a step closer to financial freedom, a brick in the wall of your future prosperity. The earlier you begin your investment journey, the more powerful the magic of compounding becomes, amplifying your returns over time. Your future self, enjoying the fruits of your labor, will thank you profusely for every dollar invested today. This is how you build a life where your money works tirelessly for you, generating income and building wealth even while you sleep. Welcome to your first step toward financial freedom, a journey that begins with a single share and blossoms into a life of abundance and choice. Let's get practical. Your first goal, $100 per month in dividends. It's not a fortune, but it's proof the system works. That first payment is a game changer. Start with reliable dividend-paying ETFs like SCHD, JEPI, and JPQ. Think of ETFs as baskets of stocks. Instant diversification, less risk. Begin investing whatever you can, $20 a week, $50 a paycheck. Consistency matters more than the amount. Pay yourself first. Move money into your investments before spending on anything else. Every dollar invested is a vote for your future. Celebrate every dividend, no matter how small. Reinvest it to grow your income. Over time, those tiny payments add up. $1, $5, $25, and eventually, you'll hit $100 a month. That's when you know passive income is real. The habit you build now is the foundation for everything that follows. Don't overthink it, just start. Your money machine is built one share at a time. Stay consistent and watch your dividends grow. This is how you unlock your first taste of financial freedom. Let's break down the numbers. To earn $100 a month, $1,200 a year, in dividends, you need to know your portfolio's average yield. If your ETFs yield 5%, divide $1,200 by 0.05. That's $24,000 invested. It sounds big, but you build it over time, brick by brick. Invest $500 a month and you'll get there in about 4 years, not counting growth. Can't do $500? Start smaller. Every dollar counts. The key is a plan. Invest consistently, cut unnecessary expenses, and redirect savings into your portfolio. Reinvest dividends to accelerate growth. It's a marathon, not a sprint. The earlier you start, the faster you reach your goal. Passive income is built with patience and discipline. $100 a month is just the beginning. You've hit $100 a month. That's a fantastic start. Now, let's set our sights higher and aim for $1,000. This is the next significant step in your journey towards financial independence. This is life-changing. It's a tangible shift in your financial reality, offering a sense of security and opening up new possibilities. Enough to cover rent, providing a significant relief from one of life's biggest expenses. Imagine the peace of mind that comes with knowing your housing is covered by your investments. groceries, freeing up your budget for other important needs and wants. It's about having more control over your finances and enjoying a better quality of life, or major bills. It can alleviate the stress of unexpected costs and provide a financial cushion for emergencies. The strategy is the same, but the scale is different. Invest more, stay consistent, and increase your contributions whenever possible. The more you invest, the faster your portfolio will grow. And let compounding work its magic. Time is your greatest ally in the world of investing. At this stage, your portfolio is a real partner, actively contributing to your financial well-being. Reinvested dividends buy more shares, further accelerating your growth, speeding up your progress, creating a powerful momentum that propels you closer to your financial goals. Consider diversifying with new ETFs like PLTI and MEFST for growth and income. These funds add variety but come with different risks. Use them wisely as small parts of your portfolio, ensuring a balanced and diversified approach to investing. The journey from $100 to $1,000 a month tests your discipline, requiring you to stay focused and committed to your investment plan. Markets will dip. Don't panic. Downturns mean you're buying more shares at lower prices. This is a golden opportunity to increase your holdings and set yourself up for even greater returns in the future. Stick to your plan. Keep investing, even when it feels challenging. No matter what the headlines say. Focus on your long-term goals and avoid getting caught up in short-term market fluctuations. Patience and consistency are your superpowers. They are the key ingredients to building a successful investment portfolio. Every month your snowball grows faster, as your investments generate more income and your portfolio compounds at an accelerating rate. Stay focused on the long-term goal. Remember why you started this journey and keep your eyes on the prize. Celebrate milestones along the way. Acknowledge your progress and reward yourself for your hard work and dedication. $1,000 a month is proof you're building real financial freedom. It's a testament to your commitment and a sign of things to come. The habits you forge now will carry you to even greater heights, setting you up for a future of financial security and abundance. Keep going. The best is yet to come. Your journey to financial freedom is just beginning, and the possibilities are endless. Let's do the math for $1,000 a month, $12,000 a year. With a 5% yield, you'll need $240,000 invested. It's a big number, but it's just math and time. Most people won't get there overnight. It might take 10-20 years depending on your savings rate. Start early, invest aggressively, and maximize your savings. Boost your income. Side hustles, raises, or new careers all help. Every extra $100 invested each month shortens your timeline. This is the grind phase. Work hard, save hard, and keep investing. Reinvest dividends to accelerate your progress. Once your portfolio hits 6 figures, compounding becomes a powerful force. Your money starts working harder than you do. Stay focused, keep feeding your portfolio, and let time do the rest. $1,000 a month is within reach if you stick to the plan. Here's the summit: $10,000 a month, or $120,000 a year in passive income. To reach this, you'll need about $2.4 million invested at a 5% yield. It's a massive goal, but the blueprint is the same. Invest consistently, live below your means, and let compounding work. Max out tax-advantaged accounts, build high income, and keep expenses low. At this level, your portfolio is a wealth engine, generating more income than most salaries. The compounding effect is staggering. This is generational wealth, enough to fund your dreams and help others. It takes decades of discipline, but it's possible. Stay focused on the long-term prize. Your money is now working harder than you ever could. The journey is long, but the reward is freedom for you and your family. Start with your first dollar and never stop. The ultimate money machine is built one step at a time. This is the end game of financial freedom. Let's take a closer look at some key ETFs that can form the building blocks of a successful investment strategy. We'll explore their unique characteristics and how they can fit into your overall portfolio. SCHD is your foundation. It's a cornerstone ETF for many dividend investors. It focuses on high-quality U.S. companies, providing a steady yield and consistent dividend growth over time. It's built for the long haul and offers stability, making it an excellent choice for long-term investors and those planning for retirement. Think of it as the reliable workhorse in your portfolio. JEPI and JEPIQ are income powerhouses designed to generate substantial cash flow. They achieve this by using covered calls, a strategy that generates high monthly payouts. This can be a great way to supplement your income. JEPI's strategy is centered around the S&P 500, offering exposure to a broad range of large-cap companies. JEPQ, on the other hand, focuses specifically on the technology sector, tapping into the growth potential of tech companies. These are great for boosting income, but expect more yield fluctuation compared to SCHD, as their payouts can vary based on market conditions. Balance these with SCHD for a well-rounded mix of growth and income, creating a more diversified and resilient portfolio. PLTY is a strategic ETF that takes a more active approach to investing. It achieves this by dynamically switching between high-growth and low-volatility stocks, adapting to changing market conditions and aiming to maximize returns. It's not just about dividends. PLTY can add smart diversification and a tactical edge to your portfolio. MSD is the high-octane option designed for investors seeking aggressive growth. It's leveraged, meaning it uses borrowed money to amplify returns but also significantly increases risk. This can lead to bigger returns but also higher potential losses. Use it sparingly, and only if you fully understand the risks involved with leveraged investments. It's not for the faint of heart. Your ideal portfolio blends stability, income generation, and a touch of growth potential, tailored to your individual risk tolerance and financial goals. SCHD as your core, providing a solid and dependable foundation. JEPQ for income, supplementing your returns with consistent monthly payouts, and a small slice of PLTI or MSD for strategic opportunities and potential outperformance. Diversification is key to managing risk and maximizing long-term returns. Remember, don't put all your eggs in one basket. Spread your investments across different asset classes and sectors. Review your portfolio regularly, at least annually, and adjust your allocations as needed to stay aligned with your goals and risk tolerance. The right mix of ETFs helps you reach your dividend goals faster and safer, building wealth and securing your financial future. Meet Grace, a real example of dividend freedom. She started at 25, modest salary, $5,000 in savings, and student debt. Her first dividend was just $15, but it was proof the system worked. Grace saved 30% of her income, automated investments, and hustled on the side. She lived simply, focused on building her portfolio. By 35, she had $250,000 invested and earned $1,000 a month in dividends. This extra income paid off her loans and gave her financial security. She kept working, but now had options and freedom. By her early 40s, her portfolio topped $500,000 with $3,000 a month in dividends. She quit her job to start her own agency. Her dividends covered her living expenses. Grace's story isn't luck. It's consistency, discipline, and a simple plan. She started with $15 and built a life of freedom. Anyone can do this with time and commitment. Your journey can start today, just like Grace's did. The first step is the most important. We've covered the path from $100 to $10,000 a month in dividends. Now the most important steps start. Don't wait for the perfect moment. Start today. Open a brokerage account, link your bank, and invest whatever you can. Buy your first share. Congratulations, you're a dividend investor. Don't get stuck searching for the perfect strategy. Action beats perfection. The best time to invest was years ago, the second best is now. Build your core with SCHD, add JEPI and JEPQ for income, and invest consistently. Let compounding work its magic. Your future self will thank you for starting today. Imagine your life 10, 20, 30 years from now, financially free, living on your terms. The blueprint is in your hands. The opportunity is right in front of you. Go build your money machine. Your journey to financial freedom starts now.